You the good news and the bad news of crypto. My name is Wayne.
And my name is Manish.
And if you like money and crypto, make sure to hit the subscribe button. Today, two brothers based in South Africa ran a cryptocurrency investment platform called AfriCrypt have disappeared with $3.6 billion worth of their clients' Bitcoin at the current price. CEO Reis Kaji and COO Amir Kaji is under global scrutiny right now. 21 years old and the 17 years old Amir are nowhere to be found. Much of Africa's crypto marketing was achieved by word of mouth. The brothers will have to reply to the proceedings, Johannesburg High Court, by July 9. Every Crips customers base span a variety of clients from businesses and wealthy individuals to those who loan money to keep up with their commitments. They were rich people without a doubt, said Mr. Bota. And people have invested their parents' pension funds. Manish.
Yeah, I was also surprised. All total, about 69,000 bitcoins are missing from the farm, while they were worth of 3.6 billion, as you have mentioned, and time of their disappearance. My God, the
Yeah,
value of the wallet currently stand at just under 2.4 billion.
exactly. And you know what's amazing is that people actually give money to younger generations, 17 years old and 19 years old. They were
Yeah,
giving their parents pension fund, and these people actually managed to raise money for cryptocurrencies.
I don't know what kind of how they'll be able to hide from after doing this. Is it's very hard to hide it. I don't know why they are doing this. It's completely.
Yeah, very interesting times. Cryptocurrency and having young children, young kids actually being able to manage millions of dollars.
Yep.
But it's not rocket science. It's something that myself and Manish created these channels to help you guys. If you like money, to subscribe to this channel. Now, in another news, cryptocurrency exchange Binance banned by UK regulators. Interestingly, Vinay was one of our friend who actually told me this yesterday, but it did not show up as part of my research. But yes, Binance is not permitted to undertake any regulated activities in the UK. Binance Market Limited is not currently permitted to undertake any activities without prior written consent of the FCA. The FCA spokesperson clarified that the scope of the ban was limited. Though Binance Market Limited is banned from offering this service in Britain, non-registered firms can still interact with UK consumers. That means Binance could still offer the Brits crypto trading through its website. A Binance spokesperson told CNBC the FCA UK notice has no direct impact on the services provided. So that's an important message. Binance told that this has no direct impact, and our relationship with our users has not changed. Okay, so we take a collaborative approach in working with regulators, and we take our compliance obligations very seriously. We are actively keeping abreast of changing policies, rules, and laws in this new space. The FCA isn't the only regulator clamping down on the crypto industry.
Yeah.
So it's something
Yeah.
to see.
So no, the person who are following Binance on a Twitter, Binance has tweeted as well for about this ban. If you refer their tweet, they are mentioning we are aware of a recent report about an FCA UK notice in relation to Binance Markets Limited. It's a separate entity. BML is a
Mm,
separate legal entity and does not offer any product or services via the Binance.com website. They have clearly clarified it. So don't. Make it complicated that this is a Binance.com entity. No, it's not a Binance.com entity.
right, right. And although it's under the umbrella, I mean, it's quite interesting that regulators are not.
Yeah,
They are FCA is not the only regulators. So I think that's something that is really good, guys. I think it's a good opportunity that now there's regulations slowly coming in, institutions buying up Bitcoin, billionaires are coming into the space. So buy Bitcoin now because you will never get it at this price. I mean,
yeah.
um,
And also, this kind of art will be circulated in a market when you're in a crypto space. Do validate with their official channels. Don't just believe in a rumors and take any actions.
Yeah, if you have any doubt, always come to Root Zones and ask us. We will get you the right answers. So with that, Manish, I have all for the news. I'm going to hand it over to you.
Yeah, I would like to play one video here and then I will talk about the videos. Today, since I have covered about the contract yesterday, today I want to cover a proof of work and proof of stake
Awesome.
so that our audience will get a more idea about the entire blockchain
Right.
concepts and protocol. Yeah.
Awesome. So while Manish sets that up, join us daily live on YouTube and Facebook, 9 p.m. Singapore time and 9 a.m. Eastern Standard Time. If you like money and crypto, make sure to smash that subscribe button. So Manish, take it away.
Hey there, my name is
Yes.
Xavier, and you might have read articles online saying that cryptocurrencies like Bitcoin uses enormous amounts of electricity to secure their networks. But why is that? And more importantly, what are the alternatives? Mining new coins takes a lot of computing power because of the proof of work algorithm. The idea was first introduced in 1993 to combat spam emails and was formally called proof of work in 1997. However, the technique went largely unused until Satoshi Nakamoto created Bitcoin in 2009. He realized that this mechanism could be used to reach consensus between many nodes on a network, and he used it as a way to secure the Bitcoin blockchain. However, the proof of work algorithm works by having all nodes solve a cryptographic puzzle. This puzzle is solved by miners, and the first one to find a solution gets the miner reward. And this has led to a situation where people are building larger and larger mining farms like this one. According to Digiconomist, Bitcoin miners alone uses about 54 terawatt hours of electricity, enough to power 5 million households in the US or even power the entire country of New Zealand or Hungary. But it doesn't stop there. Proof of work gives more rewards to people with better and more equipment. The higher your hash rate is, the higher the chance that you'll have to create the next block and thus receiving the mining reward. To increase chances even further, miners can come together in what's called mining pools. They combine their hashing power and distribute the rewards evenly across everyone in the pool. So, to sum it up, proof of work is causing miners to use massive amounts of electricity, and it encourages the use of mining pools, which makes the blockchain more centralized as opposed to decentralized. So to solve these issues, we have to find a new consensus algorithm that is as effective or better than proof of work. In 2011, a Bitcoin Talk forum user called Quantum Mechanic proposed a new technique that he called proof of stake. The basic idea is that letting everyone compete against each other with mining is just wasteful. So instead, proof of work uses an election process in which one node is randomly chosen to validate the next block. Oh yeah, small difference in terminology here. Proof of stake has no miners, but instead has validators. And it doesn't let people mine new blocks, but instead mint or forge new blocks.
Yep.
Validators aren't chosen completely randomly. To become a validator, a node has to deposit a certain amount of coins into the network as stake. You can think of this as a security deposit. The size of the stake determines the chances of a validator to be chosen to forge the next block. It's a linear correlation. Let's say Bob deposits $100 into the network while Alice deposits $1,000. Alice now has a 10 times higher chance of being chosen to forge the next block. This might not seem fair because it favors the rich, but in reality it's more fair compared to proof of work. With proof of work, rich people can enjoy the power of economies at scale. The price they pay for mining equipment and electricity doesn't go up in a linear fashion. Instead, the more they buy, the better prices they can get. But back to proof of stake. If a node is chosen to validate the next block, he'll check if all the transactions within it are indeed valid. And if everything checks out, the node signs off on the block and adds it to the blockchain. As a reward, the node receives the fees that are associated with the transactions inside this block. Okay, but how can we trust other validators on the network? Well, that's where the stake comes in. Validators will lose a part of their stake if they approve fraudulent transactions. As long as the stake is higher than what the validator gets from the transaction fees, we can trust them to correctly do their job. Because if not, they'll lose more money than they'll gain. It's a financial motivator and holds up as long as the stake is higher than the sum of all the transaction fees. If a node stops being a validator, his stake plus all the transaction fees that he got will be released after a certain period of time. Not straight away, because the network still needs to be able to punish you should they discover that some of your blocks were actually fraudulent. So the difference between proof of work and proof of stake are quite significant. Proof of stake doesn't let everyone mine for new blocks and therefore uses considerably less energy. It's also more decentralized. How is that? Well, in proof of work, we have something called mining pools. Those are people who are teaming up to increase their chances of mining a new block and thus collecting a reward. However, these pools now control large portions of the Bitcoin blockchain. They centralize the mining process, and that could be very dangerous. If the three biggest mining pools would merge together, they would have a majority in the network and could start approving fraudulent transactions. Another important advantage is that setting up a node for a proof of stake based blockchain is a lot less expensive compared to a proof of work based one. You don't need expensive mining equipment, and thus proof of stake encourages more people to set up a node, making the network more decentralized and also more secure. But even proof of stake isn't perfect, and it also has some flaws. Now you might think, hold on a minute, if I buy a majority stake in the network, I can effectively control it and approve fake transactions. And you would be correct. This is called the 51% attack, and it was first discussed as a weak point of the proof of work algorithm. If a single miner or group of miners can obtain 51% of the hashing power, they can effectively control the blockchain. Proof of stake, on the other hand, makes this attack very impractical depending on the value of a cryptocurrency. If Bitcoin would be converted to proof of stake, acquiring 51% of all the coins would set you back a whopping $79 billion. So the 51% is actually less likely to happen with proof of stake. But that's not the only risk. Proof of stake algorithms also have to be careful how they select the next validator. It cannot be completely random because the size of the stake has to be factored in. But at the same time, the stake alone isn't enough because that will favor rich people who will get chosen more frequently, will collect more transaction fees, become even richer, and thus increase their chances of being chosen as a validator even further. There are a number of proposals to fix this, like coin age-based selection, for instance. Another potential problem is when the network chooses the next validator, but he doesn't turn up to do his job. This could easily be solved by choosing a large number of backup validators as a fallback. In short, proof of stake brings additional risks when compared to proof of work, and a lot of research is needed to understand these risks and then to mitigate them.
All right. So, just wanted to give key takeaway for this proof of work and proof of stake. Proof of work was the first consensus algorithm and is in use by the vast majority of cryptocurrencies. In proof of work based cryptocurrencies, the transactions are confirmed by a miner. So as in the videos also you have seen that proof of work based on miners and proof of stake is based on validator. So the key takeaway from this is the proof of stake cryptocurrency miners can mine or validate block transaction based on the amount of coin a miner holds. The next one is proof of stake was created as an alternative to proof of work, which is original consensus algorithm in blockchain technology used to confirm transaction and new blocks to the chain. Proof of work required a huge amount of energies, as you have seen in the videos. The miners needing to sell their coins or ultimately foot the bill. Proof of stake gives mining power based on the percentage of coin held by a validator. And the next one is proof of stake is seen as a less risky in terms of potential for miners to attack the network as it is structured. And yeah, and Bitcoin, the largest cryptocurrencies, runs on proof of work rather than proof of stake. So that's why there is a fad in the market. Not fad, it's true also. Bitcoin use lots of energy.
Yeah.
So
So
that's all I
anyway,
have. It.
yeah,
Yeah.
Michael Saylor has back to differ. He still prefers proof of work. It's a debate between him and Elon Musk.
Yeah,
So Michael Saylor is saying that the proof of work architecture anchors the crypto assets network physically and politically in reality, driving ferocious competition in the marketplace to decentralize, improve, and secure the network. Thus, vitality and integrity over time. In one of his tweets, um, we will have to see. There's conversations going between Elon Musk and the CEO of Twitter with
yeah,
regards to this. I personally think that I don't ever think that Bitcoin can ever go to proof of stake. I don't know.
cannot.
Right.
I
So
think the only best way, what I can think of as of now is protocol upgrade, which
yeah,
going to optimize the
right.
energy use, which is
Exactly.
Taproot, which is
Right.
coming by November.
Right.
After that, this proof of work will be flawless. I think there is
Right.
no competition, because proof of stake still have some security
Mm.
issues.
Actually, to be honest, even Michael Saylor stated that there's no actual governing body to really calculate the exact consumption of the energy.
Mm,
Taken into consideration, we have data centers like Amazon, IBM that consume so much more, but nobody is
yeah.
saying everything. But when it comes to Bitcoin, they start to come in and they start to talk about environmental
Yeah.
issues and all that. So let's
They
see.
they use it one of the point of factor to create a FUD in the market so that they can use it for their own
Yeah,
benefits.
yeah. That's why it's beneficial to us. The,
Yeah.
the the fear, uncertainty, and doubt benefits us because with all of this created, we have the opportunity managed
Yes.
to buy now.
Yep.
I can't. It will eat into my deep pockets at $63,000. So 50% sales discount. Why not? Let's buy and
And I'm aiming for El Salvador citizenship. So
retrieve Bitcoin.
yeah.
Retrieve Bitcoin. Yeah. So yeah, that's all. Manish, is there anything on your side?
No, that's all I have it for
Thank
today.
you. Thank you. Yeah. So let's move on to the next section, which is always to check what's happening on the market side of things. Here we are, the greed and fear index. So right now we are at the 20, right? During the boom, the bull, we were at doing at about 80, in the range of 80. This week we slightly move up from 10 to 25. And there's a measurement. You can actually check out this website. When we look at a month, I just wanted to show maybe the newcomers. When we look at max, this happened last year during the COVID, right? We were at the 10, the index was at 10. Today we are doing at about 10 to 20, right? With the latest of new things about China, about all the scams and the risks, the news that is coming in. And how this index is measured is using volatility, market momentum, social media, dominance, and trends. And they look at the buying and the selling, and based on that, they gives you indication of extreme fear or greedy. So basically, extreme fear is that when investors are too worried, it creates a buying opportunity. When investors get too greedy, that means is the market is due for correction, right? So it's a contrarian way of thinking. So 20, I think is okay. We should see they will be moving up soon. Let's look over at the fear index. So the VIX is the fear index in the stock market. It is used to measure again buying and selling. Right now, it was at 15. If you look at this height, this was during the COVID time. I think the highest we hit was about 82, and prices of oil, if you can remember, last year went to negative. So a lot of panic selling happened, and companies became cheaper to buy if you were trading in the stock market. So right now, the fear has come down since that time, but we do know that the dollar is dying basically. So due to US printing a lot. Let's go to CoinCap. So we have about 10,000 cryptos. Just for your information, we have about 380 exchanges in the industry, $1.4 trillion of market cap. Dominance, of course, in the market is Bitcoin with about 46%, Ethereum, which is about 17%. So your remaining 30 odd percent is the rest of the alternate coins. Okay, let's look at the past 24 hours. So Bitcoin is up by 5%, Ethereum is up by 8.91%, USDT is up by 0.01. BNB coins up by 7.92. A lot of people made money today on the BNB coins. Cardano 6.75. Dogecoin is up by 7%.
Yep.
XRP is up by 13.85. USD coin is normal. Polkadot is 11.03, and Uniswap is up by 10.35. And our favorite coin is Solana is up by 11.18. We got in at $22 around that price. Now it's about
34.
14.34.
Yep.
So that's for the 24 hours. Let's look at the 6 months thing, top 10, right? So in 6 months, if you can look at all these exchanges, we like to look at this because it's we get to zoom out, we get to see individual coins, how they perform in the last 6 months. So 31, right? Bitcoin is about 31%, Ethereum is about 200%, BNB 700, Doge 5,000, XRP 200, Polkadot 151, Uniswap 400. So as you look at this, look at Solana 2,000 over percent this year alone, in the last 6 months.
Is
So
going to be the next Ethereum.
yeah, it's known as the Ethereum killer. So
Mm.
let's see what happens at that time. And yeah, guys, so all this fear coming in the marketplace, don't really scratch the actual, and that's the reason why institutions and banks and governments have that fear. Because look at this, you can't get this percentage, right? That's why Wall Street don't want to promote anything about cryptocurrency. And it's, to me, it's the new asset, right? Cryptocurrency is the new asset. So we have papers, we have metals, we have commodities, we have real estate, and now we have crypto. So 5 asset class. Let's look at the technicals. 36,000 at this time of this recording. Wow, amazing,
Amazing.
right? In a day. Let's look at the 4 hours. What's happening to the 4 hours on the EMA? We have an nice uptrend, right? However, be careful, right? Look at the volume. Volume is not there yet. RSI is very high. Let's see whether this can cross the 200 EMA on a 4 hour chart candle. Uh, Volume seems to be stagnant. On the 1 day chart, when we look at the 1 day chart, we are still in the distribution phase, right? For those who actually know about the week off method, right? So it looks like we're on a distribution state, which means that it's channeling left to right. It will bounce unless we have hit the bottom, which some speculate that this area is actually based on the Fibonacci technical chart. We are actually in the golden segment, which means that we still cannot anticipate whether the price of Bitcoin will drop or the price of Bitcoin will rise. If it rises, good for us. We might see a nice bull. We have to break this where the 200 EMA and the 55 meets, right? Not known as the golden cross. Golden cross normally is used by the MA, right, which is the MA that we have crossed. The cross was here sometime about a couple days ago, right, where the 200 meets the 55. But now on the EMA side, if we can cross the 200, we should see a very nice run up to the 50, 55, 50, yeah, about 50, 55 percent, dollar, and 50,000, and we have to be careful during that time because if it continues upwards, then good for us. We'll see a nice run all the way to 80 to 100 over $1,000 for Bitcoin. But if we don't, then we will drop as close as what Kiyosaki predicted, $24,000 for Bitcoin. Hi, Clifford. Thanks for joining. We are actually on the channel of Facebook, Root Zones, and YouTube. You can join us there. If you have any questions, you can post over there. So that's all I have. There's no
Yeah.
questions tonight, so it's a bit
Okay,
quiet.
I'll share something.
Sure. Let me just get rid of my screen.
Yeah. So, guys, Binance has launched is one more new feature called stock token. I just wanted to share with you guys. Okay. So in stock tokens, you can trade equity shares through crypto coins. If you own BUCD in the Binance, you will be able to invest in the equity shares, as you can
Oh,
see here. Yeah.
wow. Okay.
Yeah, so you can see Microsoft corporations, you can use BUCD and invest on the shares directly from the Binance. This is what I like about Binance. They have lots of features in terms of money making ideas, staking, trading, launchpad. Everything is killer here. This is really a very good platform for a crypto space. So
Wow. This is
yeah,
amazing.
guys who want to make use of this stock tokens, please start investing. These are very good stable corporations are there in this tokens. You can start investing it. Even Tesla, you can invest in Tesla here.
So Manish, right now that you are saying that if I have a BUSD token, I can trade on this about how many companies? Five companies so far?
Yes, five companies and five major companies.
Very
Look at
nice.
that. Micro strategies also there here.
Yeah, guys, two of the companies here, which is Apple and Microsoft, is one of the portfolio that we spoke about. If in the event the stock market crash, these companies are good to pick it up because they pay out dividends. So the idea that Manish and me is doing now is that we are putting money, we are parking money aside, and waiting for that bubble to pop. And it is expected for the stock market side to pop in 2023. So we have 2 years of planning. So most of our cash now really pretty much goes into real estate and also crypto,
Yep.
right?
Look at
So
the micro strategies growth, 13.29%. My God. Yep.
yeah, he's crazy. He's growing amazing. I uh when I watch Michael Saylor, right, the CEO of MicroStrategy, I think this guy is amazing. He understands first principle. He knows that he said that using cash in his company, he was holding cash. He would have only grown MicroStrategy as a software company for 5% annually,
Yep.
but by converting that cash to Bitcoin, he grew it 10x.
10%. Yeah, 10x.
10x, and that's why he saw the opportunity and he's jumping to buy a lot, acquiring the Bitcoin at whatever price is going on. So
Yeah.
we should model that because
Yep.
there's no other asset class that can get us there.
Yes. So getting the similar strategy we can also follow by getting your salary. That is one source of income. But if you invest it in your right places, you will be able to yeah, circulate your investments. Okay, in case if you are not aware, Root Zones has their own website where we keep on posting the market updates, the technology updates related to cryptos, and many more how to's and exchange related information. So, do log on to our website and go through the sites. You will get lots of recent posts. You can also go through the categories. If you are interested in Binance, you will be able to see the entire topics related to Binance. And this is every alternate day we are updating the post here. And of course, the shop. If you are interested on a cryptos merchandise, you can always come
Yeah.
down here and
So
shop.
maybe for those who just came a bit late, I think this stock token that Manish is sharing is amazing. Basically with BUSD you can buy a few of the companies. I hope that at some point, Binance lists a few more good companies, which like Johnson and Johnson, Colgate, because myself and Manish, we are looking for cash flow companies. And if you see the coins here, Microsoft and Apple are great companies to buy, but not at this price. Is still a bit high to me, and I'm just waiting for, as mentioned, 2023 when the federal government increase interest rates, and most likely we will go through that market
Yeah.
crash or market correction, and then we will go in to buy those coins and get the
Yeah.
dividends and
So from
investment.
one platform, we'll be able to manage the stocks as well as the cryptocurrencies.
Awesome, good job, Binance. We have to
Good job, Binance. Yes.
write to CZ, yeah, the CEO of Binance.
Yeah.
Yeah.
So
So
yeah.
another question. Yeah,
Yep.
Manish, we have another question that's coming in from Instagram on alternate coins. Do you have any alternate coins to share? Any new things that you have researched? Something good?
I'm focusing my research on Solana. The white paper I'm going through. Probably
Okay.
in upcoming videos, I'm going to share more details about Solana. It's a very good project, and probably in upcoming videos we will share more details about that, the altcoin. And then Cardano. Cardano also we are
Oh,
going to
I
share
love Cardano. Yes.
the white paper, the research, what we have done it.
Yep.
So stay tuned, guys.
Yeah, for me, I'll be coming out a portfolio because I think someone has asked us for the portfolio. And just for your audience, you get a sneak peek. Basically, a few parts. We always look at the first part, which that can you spend less than 50% of your salary, right? If you have income that you earn, 50%, the remaining 50% breaks into the other 10%, which is your entertainment. So, spa, travel, you need to live
Awesome.
life.
Yeah, yeah. We
And the
need
other
that
40
video.
Right, and the other 40% breaks into the other five asset class, which is your paper assets, real estate, gold, commodities, and crypto. Then within the crypto space, we break, as what Manish has always said, 50% Bitcoin, the remaining 50%, 40% goes to altcoins, and of course, the other 10% goes to the shit coins, Shiba, all your memes like Dodge, right? And
Yeah.
I think right now we are making some changes to our 40% of the portfolio. We are buying more Cardano, also Solana, Ethereum, right? These are good coins to keep, and they have ability to get your capital at a certain level so that you can convert that into Bitcoins. The idea is buy more land because after 21 million guys, we won't have. And look at all the news that is coming out. The billionaires are all passing away. So recently there's one in what I think South America, right? There's a billionaire, Mexico, if I'm not
Mexico,
mistaken,
Mexico.
gone, drowned.
Mm.
So few billion gone, wiped out. Then we have recently John McAfee, right? Found antivirus. Also, I mean, I don't know whether he has a secret password he gave to his family, but that is gone. And yeah,
Yeah,
so
that's what I was talking to you that day, that I have created some automation. If 45 days I'm not logging to my mail, there is one mail is going to trigger to my close one with
yeah,
all the password.
yeah. I think this is the risk we take if we want to eliminate the banks,
Yeah.
right? I mean, the intent of Bitcoin was to eliminate the middleman so that I can still do transaction with you. And
Okay. And think about a person who's holding in a hardware wallet. If that gone means completely gone, no?
yeah, I saw one video. They actually solved that problem, Manish. I forgot the name, but we should do a video of
We
that.
should do a
So
video
if
first.
your hardware is spoiled, you can still purchase from the same company a new hardware. But again, you must remember that phrase. So can you
Mm.
imagine somebody going through dementia or had a car accident and then part of the brain is gone?
Gone.
So there's only so much in circulation. That's why I know the Bitcoin saga is the future. And thank you to all this fear in the market and uncertainty and doubt, because average investors like us can buy it at a 50% discount.
Hmm.
So I mean, some people are fearing that this thing dropped to 24,000 or 20,000. It's $10,000 away, guys. Whether I buy it now or buy it later, it doesn't matter. So
Doesn't matter.
right, I may lose money in the first 2 years, but maybe make back as the supply becomes limited,
Hmm.
right? And you know what's the best opportunity? Yes, this thing started in 2009. We are maybe short of 10 years, but it's only now that banks, that countries, we imagine when Manish and me started this show, we countries never accepted Bitcoin. We covered two countries that started to take Bitcoin. We covered yesterday a bank taking Bitcoin. So it's new information, and you never got this
And
in the last 10 years.
yeah, and also the DBS, our local bank, Singapore local bank, is coming their own exchange
Yeah,
for
it's a race.
cryptocurrencies.
It's a race. And did you know that Temasek I mean, I don't know how many years back, but and how much did they buy? They were also invested in a blockchain technology when they also have Bitcoin. So they must have seen the power of Bitcoin reaching 63,000 and changing their entire portfolio, overcoming even the recession, right? I mean, not sorry, not recession, inflation,
That's
inflation.
why I like the Michael Seller line he mentioned in his interview. I'm not a trader, I am a technology believer.
I love
And
that.
my technology belief
Beautiful.
says that this Bitcoin is the right investment.
Beautiful, beautiful. And he spoke something so clear that Manish and myself, we met a guy. I can't mention his name because he's always behind the scene.
Yeah.
So during our conversation, he showed us the DeFi platform, and it was mind blowing. mind blowing. When we saw the technology behind it, I suddenly became a believer. And when Michael Saylor said that, I know this guy from MIT understands first principle. He knows the fundamentals of blockchain. And even the recent billionaire, Manish, we covered in the few episodes.
Blurry.
Not Michael Berry, and I think another
Bird.
person. He suddenly became a believer when he understood the technology. So blockchain will stay. Cryptocurrency may come and go. We are just only keeping eyes on the leadership team. Manish covered that how to actually select the coins, right? Looking at tokenomics, looking at the team, looking at the vision, looking at the technology, how it complements the whole ecosystem. And then of course we always look at investment, which is the four things: the fundamentals, the technical, the cash flow, and the risk, which
Mm.
we'll be covering in future videos. So that's all I have. Thank you for joining, guys. If you have any questions, just let us know. If not, same time and same channel.
And if you have any further questions, please let us know.
Take care.